Here's today's Money Metals Minute, brought to you by MoneyMetals.com. This is the seventh straight week in which silver's traded both below and above $20 per ounce. 7 weeks, usually about the extent of tight sideways trading ranges. It appears some big speculators are betting on an upside breakout. Silver exchange-traded funds, ETFs, saw some of the heavy inflows this week. So far, it's worked out okay, as the largest of these exchange-traded products haven't shown significant deviations from spot metal prices. But in chaotic conditions or derivatives blow up, or even a run on the bank-type event in the physical market, the lack of 100% physical banking at all times could become a problem for holders of the ETF instruments. So now here's a special report from Mike Gleason of Money Metals Exchange.
It is my privilege now to be joined by John Rubino of DollarCollapse.com and Bearing Asset Management. John is a former Wall Street analyst and a writer for CFA Magazine and a featured columnist with TheStreet.com. He's also authored several books, including The Collapse of the Dollar and How to Profit from It. In terms of what the governments are capable of doing in time of crisis, last time we spoke, we talked a lot about the war on cash, and I want to cover that with you a little bit here again today. What's the latest on that front? Is this movement to do away with cash continuing to get traction?
Well, yeah, and the point of the war on cash is that, as we talked about, governments have pushed interest rates down to zero and in negative territory in some cases. And there's a problem with trying to go beyond that, because anybody with money in the bank who is being charged for their savings account, in other words, if the rate on your CD or your checking account or your savings account is negative 2%, why keep that money in the bank, right? You just pull the money out, keep it under your mattress or wherever, and you don't have to pay the negative interest rate. Well, that short circuits the government's ability to push interest rates sharply negative. And so they're looking for ways to maintain the ability to lower interest rates. And one way is to make cash really inconvenient to use and or completely illegal, and so they're trying different things right now. For instance, in some countries, they're limiting the size of payments that are legal in cash. In other words, you can't just go out in France, for instance, and buy a car with cash. You have to use some kind of electronic payment. And in other places, they're talking about putting, for instance, stickers on currency that lowers the value of the currency. You have to go out and get a new sticker every couple of weeks if you keep cash. And if you don't do it, the cash becomes invalid. And if you do it, the cash becomes less valuable over time. And in that way, you're incented to spend rather than save your cash. And there are lots of other things they're trying. And the gist of it is that if they feel the need to push interest rates down to below zero, they want to have the ability to do it. And cash is standing in the way. So what they're going to try to do is to eventually push us all into electronic accounts and make cash, in some cases illegal, and in other cases just super inconvenient, and hope that we choose not to use it. There are technical problems with this, but the bigger problem is that you lose the last vestige of financial privacy if you have to transact completely electronically, because then the NSA or the IRS or whoever else has access to your accounts can watch what you do 24/7. They've got your location on your cell phone, and they're also listening into your conversations through your cell phone. They've got your transactions via your credit cards or your cell phone if you use iPay or whatever. So they see you 24/7. You have no privacy whatsoever anymore. And cash is sort of the last little bit of privacy that we have left. So you take that away, and it gives immense power to the people in charge, even more immense than they currently have. And so it's really a civil liberties issue more than an economic issue. But I would say, though, that if they take this to its logical conclusion and make cash illegal, then what it'll do is create a black market in transactions that bypass traditional fiat currency cash. And so you might see Bitcoin or some other cryptocurrency become the transaction method of choice for a big part of the world. Or we go back to silver coins or gold coins or something like that. Things that we can transact in privately. So I think the governments of the world will have bitten off more than they can chew if they actually try to make cash illegal or just incredibly inconvenient, because we'll choose other ways to transact, and we won't just be pushed completely into a electronic transaction. War on cash is actually very good for gold.
And that was John Rubino and Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold currently trading at $1,344.40 per ounce. Silver comes in at $19.37.